So far, sustaining price movements above the 236. We're seeing this death cross having happened here, but with the relationship that the price has to the moving averages. Now, we're not seeing the moving averages cross over. Let's just have another sort of quick lesson here. That's what the 50 kind of looks like currently, right? And then we have, this is what the 200 looks like more or less currently, okay? I'm surprised with the accuracy of the way I've traced those, even though that's not. Anyway, that's what they look like right now, and the price is operating in here at that zone. So obviously they've crossed, and it's a death cross here on the 24-hour time frame. However, the price action's right next to it. Now that works in two ways. One of them is that, of course, we can both like sort of confirm, give this a wee tick, then confirm, and then of course, you know, traverse towards the downside then thereafterwards. Or of course, you know, what could be taken into account is the actual position of the price itself being above those, and that by definition we're going to see an upward incline in both of these moving averages. Now the difference here really boils down to the fact that the 50 includes prices which have been, you know, moving towards the downside, and stops including these prices back over there. If I just take out the measuring stick and go from where we are at the current candle back 50 bars, right, you can see that this includes this area here, right? This is another one of these little educational snippets for the community. So you have this here, and this is obviously, all of these numbers are what account for the 50 period moving average lining up perfectly right now with the 236 Fibonacci retracement point, okay, giving us that nice confluence in there as a result of this movement here, which is purely the downward move and then the subsequent rise up again thereafter as we came in with this slightly bullishly divergent low at that point and moved towards the top sides, okay? Whereas the 200 period moving average includes going back 200 periods, includes information from all the way back here before our rise up the way, okay? So it includes some stuff that's lower and it includes some stuff that's higher, which means that, you know, we can look at this, right? We're allowed to. Right? This is within the rules of what you, as a human being who's a sovereign entity, is allowed to do, okay? So you're not allowed to do this. The reason I say that is because a lot of people feel, especially who they're new to technical analysis, that somehow they're not allowed to use their own brain, and instead they have to outsource that to the wealth of experience that exists in the world. Well, of course, that's not really going to work really for you long term. I invite you to use your own cerebellum here. So just looking at this and saying that, you know, overall, if the prices do continue to move towards the top side, then of course this is going to drag the 50 moving average up very, very rapidly. In fact, just going sideways at this point, we'll see an incline in the 50 period moving average, and we want to take out our previous highs in there and move past the 50% point in terms of this Fibonacci and confirm this 236. We'll take out the 382 and take out the 50% area, and then we'd be putting in a higher high trending towards the top side. Everything would be gravy-licious, and this would have been some sort of bull flag or something like that. Anyway, with the 200 simple period moving average, we still include areas that are down below. So we're going to see this continuing to move towards the top side really overall as a result of this being a higher low that we put in here. And this is, of course, each one of these are getting taken off as we move forward and replaced by a number which actually springs up towards the top side and gets bigger quicker, right? So this boils back down to the fact that we're right here now. If we were below in this area down below just here, and we saw the prices crossing as a result of the recent price action instead, and we were just in that area there and looking up the way, as you so often see the crosses happening in relation to the prices, you know, or whatever. This would mean that, of course, then that we're continuing to put in pressure to the downside on the 50 regardless of the recent past price history, because we'd be below it. So in effect, we're always adding negativity to it. That's implicit and inherent in the maths. Intrinsic, if you like. So that would obviously be happening, and the 200 would be happening like that, while we have no chance of taking out any of these periods here of where price action was higher. Whereas we are saved by the fact that the price action is currently operating above at least this period just here with regards to the 200, and this period just here, pardon me, and the 50, so we can see that there's a greater chance of this failing with result of the price being there. However, movements down past it give you a quicker confirmation of it, okay? So after a cross, you want to look for that confirmation. That confirmation often takes form in a little bit of a counterintuitive move against the trend to go back up and retest them, or go back down and retest them. In this instance, the prices would be moving down to then test them as they went on past. Now, you might then see a retest of them after they go into the the sandwich zone, between the two lines, etc., etc., etc. So we know how these things can play out, but we're getting off on a negative footing unless we see immediate strength. Bear in mind a couple of things here. For instance, we're below the 50. We crossed over here in terms of negatively while the price was below it. Are you able to cast your mind back to the part during the Ethereum Bitcoin video where we talked about how the trend of the moving averages can cross and where in relation to the price when they cross and how that can affect things, and how there could also be retests of those afterwards and that would constitute confirmation? Do you remember that section? Are you looking for something that would maybe catalyze that in your memory? Maybe, for instance, an alternative comparison where it's not the same point of view and at least you can get that round holistic picture and be able to remember things for the future. Do you want that? Okay then, here we go, let's do it then. So you can see that over here we crossed towards the death cross side on the 24-hour time frame and the prices were below it. Counterintuitively, you quite often expect to see prices actually retest these moving averages in the immediate aftermath of a cross. So what you'll see is on this day over here on the 7th of October, numerous people in the world of Chainlink saying we're doomed, we're doomed. And then of course it kept crying that out as we saw the prices actually did drop down a tiny wee bit here the following day from going from $2 a Tezos down to $1.97 a Tezos, and oh my goodness, the death was coming in. But then we went up and we retested the 50 simple moving average. Then of course we recaptured it. Then we tested the 200 period moving average there afterwards, but we're still in this negative trend. And if we look here, we can see that we're sandwiched between the two, and surely you can kind of make that nice comparison yourself there with regards to obviously seeing this cross while we're positioned as such, and what the next potential price movements of that nature could have been. And if we were to jump back over then towards the Ethereum Bitcoin chart, having watched this entire episode and knowing what we were talking about there, you might have some ideas about how this is obviously a very different situation, whilst of course in terms of the headlines on the newspaper articles would say death cross on Ethereum Bitcoin pairing, right? That's what they'd say. Then they'd say of course negativity coming in immediately, and of course just like they did over here on the Tezos pairing where they said death cross on this, negativity coming in immediately. Of course that wasn't what actually happened, and that's not how TA actually works, and nobody who really has spent years doing this actually talks about things in that way.